Choosing your business structure is more than just filling out paperwork. It's a pivotal decision that will shape the trajectory of your company. It's about laying the groundwork for long-term success and stability. It's the very foundation of your financial future, influencing everything from your tax obligations to your personal liability. Think of it as the blueprint for your business's financial well-being. The right structure provides a robust shield, protecting your personal assets from potential business liabilities. It acts as a safeguard, ensuring that your hard-earned savings and possessions remain secure. And, crucially, it can save you thousands of dollars in taxes each year. Strategic structuring can unlock significant tax advantages, allowing you to reinvest more capital back into your business. Unfortunately, many entrepreneurs rush through this critical step, eager to get their business up and running. This haste can lead to significant problems down the road, risking unnecessary taxes, increased scrutiny, and personal liability that could have been easily avoided. The wrong choice of business structure could expose your home, your car, your hard-earned savings, and other personal assets to potentially devastating business lawsuits and financial claims. This vulnerability can put your entire financial future at risk. Among the various options available, limited liability companies, or LLCs and S corporations, often called S Corp, are consistently the most popular choices for small business owners due to their blend of simplicity and protection. Each structure offers a unique set of benefits, specifically tailored for tax optimization and robust asset protection. Understanding these nuances is crucial. Understanding their key differences is absolutely key to making a smart strategic decision that aligns with your specific business goals and risk tolerance. As tax laws and regulations continuously evolve and become more complex, knowing precisely how these structures work and how they interact with the current legal landscape is more important than ever for long-term financial health and stability. In this guide, we'll break down the intricacies of LLCs, S Corp, and other relevant business entities, and provide you with the knowledge you need to choose the best fit for your unique business needs and circumstances. Let's demystify your options and cut through the complexity so you can build a business that's not only successful today, but also built to last for generations to come. An LLC, or limited liability company, is a popular business structure chosen by many entrepreneurs and small business owners. But what exactly does it mean to form an LLC? What are the benefits and how does it work? Let's break it down in simple terms. We'll explore the key features of an LLC and why it might be the right choice for your business venture. At its core, an LLC is a legal structure that protects your personal assets from business debts and lawsuits. This is a crucial advantage, as it separates your personal finances from your business liabilities. Without this protection, your personal savings, home, and other assets could be at risk if your business faces financial difficulties or legal claims. Think of it this way. It's like a shield between your business and your personal life, providing a layer of security and peace of mind. This separation is one of the primary reasons why so many business owners opt for the LLC structure. It allows you to take risks and pursue your business goals with greater confidence. Forming an LLC is simple. It's a relatively straightforward process compared to setting up a corporation. To get started, you typically need to file articles of organization with your state and pay a fee. This document includes essential information about your business, such as its name, address, and the names of its members, owners. The filing fee varies by state, so it's important to check with your local Secretary of State's office for the most up-to-date information. LLCs are flexible, offering a great deal of freedom in how you structure and manage your business. Whether you're a solo entrepreneur with one owner or a partnership with many, it works for both. This adaptability makes it an attractive option for a wide range of businesses, from freelancers and consultants to startups and established companies. When it comes to taxes, the IRS treats a single-member LLC like a sole proprietorship, meaning that the business's profits and losses are reported on the owner's personal tax return. Similarly, a multi-member LLC is typically treated like a partnership for tax purposes, with profits and losses allocated to each member based on their ownership stake. In both cases, profits and losses pass through to your personal tax return, meaning they are reported on your individual income tax form. The LLC itself doesn't pay federal income tax, which can simplify your tax obligations. It's important to remember, an LLC is a legal structure, defining how your business is organized and protected, not a tax classification. With an LLC, you get liability protection, shielding your personal assets from business debts and lawsuits. And the IRS decides how you're taxed by default, based on whether you're a single member or multi-member LLC. But here's the power move. This is where the real strategic advantage of an LLC comes into play. An LLC can choose how it wants to be taxed, offering the potential to optimize your tax strategy and reduce your overall tax burden. This flexibility makes the LLC a favorite for small business owners, providing a powerful tool for managing both legal liability and tax obligations. It's the building block for more advanced tax strategies, allowing you to tailor your business structure to your specific financial goals and circumstances. Understanding the nuances of LLC taxation is crucial for maximizing its benefits and ensuring long-term financial success. An S corporation or S Corp isn't a business you form with the state. It's a tax election you make with the IRS. First, you form an LLC or C corporation, then file Form 2553 to be taxed as an S Corp. Think of your LLC as the car, and the S Corp election as the engine you choose for tax purposes. S Corp have rules no more than 100 shareholders. All must be U.S. individuals or certain trusts. The main reason to elect S Corp status? Tax savings, especially on self-employment taxes. S Corp let you split income into salary and profit distributions. This split is the secret to S Corp tax savings. Remember, S Corp is a tax choice, not a business type. When it comes to understanding the tax implications for your business, both LLCs and S Corp offer unique structures. But one thing they have in common is that they are pass-through entities. Let's delve into what that means for you as a business owner. This means the profits generated by your business don't get taxed at the business level. Instead, the profits flow directly to your personal tax return. It's a streamlined approach that simplifies the tax process for many small business owners. This pass-through taxation is a significant advantage, as it avoids the double taxation that C corporations often face. With C Corp, profits are taxed at the corporate level, and then again when distributed to shareholders. LLCs and S Corp bypass this, offering a more tax-efficient structure. Now let's look at the specifics. A single-member LLC, by default, is taxed like a sole proprietorship. This is the simplest form of pass-through taxation. Under this structure, all profits are subject to both income tax and self-employment tax. This includes Social Security and Medicare taxes, which can add up quickly. To illustrate, let's say your LLC earns $100,000 in profit. This entire amount is considered your income for tax purposes. Consequently, you pay both income tax and self-employment tax on the full amount of $100,000. This can result in a significant tax burden, especially for profitable businesses. However, there's an alternative. If you elect S Corp status for your LLC, the tax treatment changes. One key requirement is that you must pay yourself a reasonable salary for the work you do for the business. For example, suppose you determine that a reasonable salary for your role is $60,000. You'll pay payroll taxes, including Social Security and Medicare, on that $60,000 salary. These are the standard employment taxes that apply to wages. Now consider the remaining $40,000 of the LLC's profit. This is treated as a distribution to you, the owner. And here's the crucial difference. This distribution is not subject to self-employment tax. This is where the potential tax savings of an S Corp election come into play. Only your designated salary is subject to Social Security and Medicare taxes. The distribution avoids these taxes, leading to significant savings. The distribution is still taxed, but it's taxed as regular income at your individual income tax rate. By taking the distribution, you avoid the extra 15.3% self-employment tax that would apply if the entire $100,000 was considered self-employment income. This ability to separate your income into salary and distributions is the core of the S Corp advantage and a key tax planning strategy. By strategically splitting your income between salary and distributions, you can optimize your tax liability. Ultimately, this approach can lower your overall tax bill, allowing you to keep more of your hard-earned profits. And that means more money stays in your pocket, fueling further growth and success for your business. Let's see the numbers in action. With a default LLC, $100,000 in profit is all subject to self-employment tax. After IRS adjustments, you pay about $14,130 in self-employment tax alone. That's on top of your regular income taxes. Now with an S Corp, you pay yourself a $60,000 salary. FICA taxes on that salary are about $9,180. The remaining $40,000 is a distribution, no self-employment tax. That's a tax savings of nearly $5,000 each year. This isn't a loophole. It's a legitimate IRS-approved strategy. File one form, run payroll, and you keep more of your earnings. As your business grows, so do your savings. The S Corp advantage compounds year after year. That's real money back in your business. Self-employment tax surprises many new business owners. As your own boss, you pay both the employer and employee share, 15.3% total. Standard LLCs get hit with this tax on every dollar of profit. For service businesses with high profits and low expenses, this can be painful. The S Corp election is your escape route. The key: pay yourself a reasonable salary, then take the rest as distributions. Salary is taxed like any employee's wages. Distributions are not subject to self-employment tax, but don't set your salary too low. The IRS expects it to be reasonable for your role. S Corp let you separate your roles as owner and employee for tax purposes. That's where the real savings happen. How do you choose? If your business earns $40,000, $50,000 plus in profit, consider the S Corp election. Below that, the extra costs and paperwork may outweigh the savings. Start as an LLC for simplicity and protection. You can elect S Corp status later. S Corp require payroll, regular salary payments, and careful bookkeeping. Use a payroll service to stay compliant. Always consult a tax professional before making the switch. They'll help you set a reasonable salary and maximize your savings. The right advice now can save you thousands later. Avoid these common pitfalls. Don't pay yourself an unreasonably low salary as an S Corp owner. The IRS will notice. Keep business and personal finances separate to protect your liability shield. Sloppy bookkeeping can destroy your legal protections. Know your state's rules. Some have extra S Corp requirements or taxes. Don't set it and forget it. Your business structure should evolve as you grow. Review your setup with a tax advisor every year. As profits rise or your business changes, adjust your structure for maximum benefit. Proactive planning beats costly mistakes. Stay informed and stay protected. The best structure is the one that fits your business today and tomorrow. Start with an LLC for flexibility and protection. As profits grow, consider the S Corp election to save on taxes. The LLC is your legal shield. The S Corp is your tax-saving engine. Review your structure as your business evolves. Consult professionals to make informed decisions. Build your business on a strong foundation. The right choice now supports your growth for years to come. Don't leave it to chance. Be proactive and strategic. Your business deserves a foundation built to thrive.